Hey everyone, and welcome back to the channel. Today, we're diving into a financial phenomenon that's so extraordinary, so unbelievable, it sounds like something plucked straight from a fantasy novel. Imagine a company with literally no revenue, no products approved for sale, and not a single patent to its name, yet its stock has exploded in value by an mind-boggling 64,000% this year. Its market capitalization now eclipses that of well-known American brands like Lululemon, eBay, and even Kraft Heinz. This isn't a made-up scenario. This is the very real and truly baffling story of Regen Cell Bioscience, and we need to understand what on earth is happening here. Regen Cell Bioscience is a company based in Hong Kong, and it was founded back in 2014. It's been trading on the Nasdaq stock exchange since 2021 under the ticker symbol RGC. Now, here's where the story gets absolutely wild. Despite its multi-billion-dollar valuation, Regen Cell has consistently reported zero revenue. Let me repeat that, zero revenue. Their own public filings explicitly state they haven't generated any income from their formula candidates, nor have they even managed to apply for any regulatory approvals for their treatments. In fact, for the fiscal year that ended in June 2024, they reported a net loss exceeding $4 million, which followed a $6 million loss from the year before. They've even gone so far as to state in an official filing that they may never be profitable. This is not a company sustaining itself through sales. Their operations have primarily been funded by shareholder loans and the proceeds from their initial public offering, which brought in just over $21 million. So how does a company with absolutely no revenue, no market-ready products, and a track record of losses manage to achieve a market capitalization that soared to nearly $30 billion in a single day and then climbed even higher, topping $36 billion the very next day? The sheer scale of its gains this year is jaw-dropping, surging over 64,000%. To put that in perspective, shares that once traded for mere pennies are now worth a fortune for some early investors. A major catalyst for this recent astonishing surge was a massive 38-for-1 forward stock split that took effect just earlier this week. The company publicly stated this split was intended solely to enhance liquidity and make the shares more accessible to investors. While it's crucial to remember that a stock split fundamentally changes nothing about the intrinsic value of a company, it's literally just cutting the same pie into more slices. In Regen Cell's case, it unleashed a torrent of buying activity. The stock tripled in value in a single day immediately after the split, and it continued to climb, even triggering multiple trading halts due to its extreme volatility. This isn't an isolated incident for RGC. This stock is notorious for its huge one-day swings, often jumping or dropping as much as 30% in a single trading session. The core of Regen Cell's business revolves around what they call a proprietary traditional Chinese medicine, or TCM, formula. They claim this formula was developed in partnership with a TCM practitioner named Sik-Ki Ah, who is notably the father of their current chief executive officer, Yet-Gai Ah, using his Sik-Ki Ah TCM brain theory. Their product candidates are described as liquid, orally taken TCM formulas, which they say are made exclusively from natural ingredients like detoxification herbs, blood circulation herbs, and digestion herbs. These are supposedly designed to address mild, moderate, and severe conditions of childhood attention deficit hyperactivity disorder and autism spectrum disorder. Beyond these broad claims, however, very little concrete, verifiable information is known about the actual efficacy or commercialization potential of these treatments. The company has pointed to a patient's case study from late 2023, which involved 28 patients over 3 months, and they say this study showed an improvement in symptoms of ADHD and ASD. They also conducted an earlier case study in 2021 where they treated a dozen patients with suspected or confirmed COVID-19 cases using a modified cold and flu formula, which reportedly showed improvement and led to a joint venture for commercialization in Southeast Asian nations. Despite these patient case studies, crucial details like independent, peer-reviewed validation for these findings are conspicuously absent. The company openly states they have no granted patents or pending patent applications for their formulas. Now, let's talk about what truly distinguishes this situation and helps to explain the extreme volatility we're witnessing: the company's ownership structure and its remarkably limited public float. The CEO, Yat-Gai Ah, holds a staggering 86.24% of the total outstanding shares. This means that out of approximately 500 million shares, only about 30 million are actually available for public trading. That's an astonishing astonishingly tiny 6% of the total shares, a stark contrast to major corporations like Apple, where over 98% of their shares are publicly traded, or Tesla, which has 87%. When so few shares are available for regular investors to buy and sell, even relatively small amounts of buying or selling pressure can dramatically swing the stock price up or down. This severely limited float is a fundamental reason why we're seeing such unbelievable, almost irrational movements in the stock. The market's reaction to Regen Cell has been, to put it mildly, deeply polarized. Online discussions among investors reveal a mix of genuine enthusiasm from some speculative traders and outright skepticism, bordering on ridicule from others. You'll find comments on social media platforms labeling it the complete bullshit company of the year. Some retail traders openly admit they're simply scalping daily profits from its unpredictable movements, essentially treating it more like a meme coin than a traditional investment. Other investors have publicly laughed at the company's description when considering its financial realities, while industry professionals have noted its bizarro nature, being a Chinese-based, low-volume stock with no official news or catalyst driving its massive spikes. It's undeniably a stock that thrives on speculation and short-term trading rather than being valued on traditional business fundamentals. This company famously jumped 1,360% in May alone without any significant news to justify it. Adding another intriguing layer to this unusual surge is the broader conversation around alternative medicines in the United States. The timing of Regen Cell's meteoric rise has surprisingly coincided with an increased focus on these types of treatments, especially after Robert F. Kennedy was appointed Secretary of the U.S. Department of Health and Human Services in February. Kennedy, who is widely known for his vaccine skepticism, has openly taken steps to discourage routine immunizations, and most recently, he removed all members of the key advisory panel on vaccines for the Centers of Disease Control and Prevention. This shift in the public health discourse, regardless of your personal stance on its merits, may have inadvertently contributed to a speculative interest in companies like Regen Cell, tapping into a nascent market sentiment for non-traditional medical approaches. So, what does all of this mean for you, the average American investor? The story of Regen Cell Bioscience is a vivid, powerful reminder of the extremely speculative corners of the stock market, where traditional valuation metrics like revenue, profitability, and even patents seem to go completely out the window. It highlights how unique factors, such as an extremely low number of publicly tradable shares, combined with overwhelming market sentiment and broader shifts in public interest, can lead to astonishing, if not entirely logical, price movements. While these stories of overnight fortunes can be incredibly exciting to watch, they also inherently carry immense risk. Always remember that the potential for incredible gains often comes hand in hand with the potential for equally incredible losses, especially when a company has no revenue, no proven products, and an unproven business model. It is absolutely crucial to do your own thorough research and understand the risks before considering any investment, especially in highly volatile and speculative stocks like this one. Thank you for tuning in today, and I truly hope this provided some valuable insight into one of the most perplexing and fascinating stock market phenomenon we've seen recently. If you found this information valuable and thought-provoking, please take a moment to hit that like button, subscribe to the channel for more content like this, and make sure to ring the notification bell so you don't miss our next video. We'll keep a close eye on these captivating market developments, and I'll see you in the next one.